Hey guys, Mike here. So, oh boy, what another day in the market. Green, green, green. Boy, tech was roaring, right? And we're going to get into all that and stuff. And I do want to thank you guys who are watching the latest videos because it seems like a lot more people are watching. So I really appreciate it. It makes it worthwhile to make them sometimes. It takes a lot of time. So I really do appreciate that, guys. And, we're going to go into the charts and everything, and something I'm going to, present to you because, again, on this channel, we just keep it real. And so we'll see if this ever takes effect. I showed it to the members last night, and I'm like, how high can it go? And you're going to see what I'm talking about on that. And we'll talk about Tesla, a lot of information on Tesla because that one's still going green. A couple other stocks, but I did want to start off, and I'm also going to touch base on the breadth of the market, right, which is showing some improvement, right? So we're going to look at that because that's a big thing. But I did want to start off with this. Two things, actually. One, it amazes me how much insider trading takes place, and the SEC literally does nothing about it, right? So this trade right here went from 2 million to 20 million, right? May 24th, this person loads up on ETRN $8 October calls. This stock has hardly any kind of call volume to it whatsoever, right? It's a small stock. May 27th, the debt deal passes with a surprise pipeline for that same stock. The contracts rally 1,000%, right? And then you can just look right here. Here is the volume right here, the options volume and stuff. I mean, you can see what it was before going from April up. I mean, look at that. And of course, the big question is, everybody wants to know is, wow, who made that bet, right? I mean, it had to be somebody who had knowledge of the bill that was coming through with this surprise pipeline and stuff. So you can guarantee a lot of people be watching when if they ever do release, because sometimes they don't. They're trading stuff out of Congress. Was it an aide of the congressman? Was it a family member? Was it Nancy? Was it her husband? I mean, but that is just, it's mind-boggling how stuff like that happens because that's insider information. There's no, that company is a small company and there's hardly any kind of call volume on that stock to begin with. And all of a sudden somebody's buying how many contracts right before, 3 days before this debt ceiling passed, which has that in the debt ceiling bill. I mean, that's unbelievable. Unbelievable. If you have any more information on that, please let me know in the comments, but that's just crazy to me. And the other one is, I always see some trades every once in a while where I think to myself, can you imagine being this wealthy? Not rich. Rich you can lose, on a bad weekend in like Vegas somewhere, right? But wealthy you can't. And look at this right here. Walmart, the old Walton family, they sold just last week over $400 million in stock. Over $400 million between 3 of the family members, I believe, right there. And that doesn't even put a dent into the amount of shares these people own. And that was just in 1 week. So I don't know if they see something coming down the pipeline or they just need to buy another yacht. I'm not sure. But can you just imagine being that wealthy? Oh, selling $400 million worth of stock in 1 week. Wow. Anyway, now talking about the breadth, here we go. So Russell 2000, this is the one we really want to look at. You can see this is percentage of members with 52-week highs, right? And obviously last week had a pretty big move up, so it did move up. Still couldn't eclipse February. Still can't get to double digits for members at new 52-week highs. Again, though, I mean, the new 52-week highs, I don't really go into that one more than I do just kind of like, are they continuing to move up and set new higher highs and new higher lows, right? But again, this is a way we measure breadth. And then in the overall New York Stock Exchange, you can see percentage of members with new 52-week highs. You can see nice pop right there, right? Still only about 7%. And when of course you fade back and you look at any other rally we've ever had, I mean, it's way higher. So, it's just kind of one of those things. We can get above 10. That would be great or whatever. We'll see if that continues, though. It is actually improving, so make sure keep that in mind. The other one was surprising is all of a sudden, big money says, hey, instead of going just into the S&P, let's go into the equal weighted ETF, right? So this right here is the equal weighted S&P ETF, and it sees the biggest weekly inflow ever. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so this is one of the things that continues to push the market up is because, again, I showed you yesterday, I showed you a video last week where you got these fund managers that they're like, oh boy, can't miss a rally, even though it's been rallying for a while now. Got to get in, right? Because if I'm wrong, but I'll get fired if I miss this move up. And they're also looking for other areas. Like, what is underperforming, right? And so what is it? Well, I've showed you. I mean, this one right here is underperforming the S&P. And so they're like, hey, let's start getting some of these equal weighted ETFs. I can guarantee some of the stocks on there are starting to get bought up as well that are behind, right? And so because if you look at a lot of the stocks, like, the big ones, the big mega caps, I mean, they're so far out there now. People continue to buy them because they keep pushing them up, right? But other people are looking for other alternatives and stuff, and I'll show you another one tomorrow. But of course, as the Qs keep going up, and that's what the greed's at, right? In the Nasdaq, I don't think the greed is so much. I mean, some of it's in the SPY, but it's definitely not in the IWM, right? And so, not yet, at least. But this right here, this is one of those kind of indicators. Like I told the members, maybe it's broke, maybe it is, but we're at extreme greed. It continues to go up. Now we're at 79, and this may be hard to make out. But what I did was I overlapped the S&P. I probably should have put the Qs, but I used the S&P. And at the bottom is that fear and greed index, right? And it's been very good. When you get over 70, that's when you need to be really start paying attention, right? And you get below 20, okay? When you get 70 and over, 20 and below, right? That's when you're usually going to see either a pullback or a move up, okay? Because 70 or over, everybody's too dang greedy, which you can see right there. And we got into 70 there. And so, these are the highs. Like you can see, they almost line up perfectly. And I try my best to get this to line up. And you can see this one got actually 275. There's a pullback. The other one got to I think it was 80 or something like that right there. There's a pullback. And then, of course, moving over to where we're at now, we're sitting at 79. So you can see no pullback yet. It keeps going, right? Which we'll get into the charts just a minute. And then looking at when it's, the market gets oversold and too fearful, that's around 26. Bam. Nice move up, obviously. Two of them over here, actually. Then you got one around 18, another one around 20, and you get your big move up, right? So it kind of lets you know, okay, when, fear's in the street, there's another one. Time to start buying. When there's too much greed, start taking some off, which big money has actually. I mean, I know rich folks especially have been doing that, taking some off and rotating in other things, maybe undervalued. But just looking at that, let me know what you think in the comments. And again, where's the greed at so far? It's in the Qs, right? Doesn't seem to be affecting it. And what the Qs do today, and it's a 1.5% gain, it filled that gap right there to the penny. It filled that gap right there. Okay, some people complain about, oh my God, the gaps. We talk about the gaps, yeah, because the gaps get filled. That's why. And they usually fill about to the penny before they start rejecting and finding some important stuff. So, and again, what's up next? That the next line right above there was at 370-ish. So keep that in mind right there on the Qs, because it broke through the 618, the 650, and it just keeps rolling, right? I showed you what happened in 2000, 2008, and that's why this matters. And understand, especially the Qs, as long as these stocks right here, that's why I have them in a watch list, and I just look, like this morning I did my morning news brief, I said all the big mega caps are green, that's why the market's green. There's no news, no nothing. Didn't even matter, right? Especially if that's 9 stocks right there, are green, then the Qs are at least going to be flat at worst, are green, right? Because they hold over 55%, I believe it is, maybe more now, of the Qs. And so just keep that in mind. And so, IWM, this is the one we thought, oh yeah, we're going to the moon on IWM right now. Look at that trend line. It goes back to September of 2021. This is the third hit right here. And so we'll see right now, it looks like almost like a bull flag, but we're consolidating right on that trend line, trying to get that move up to between 187, 189 right there, as you can see. Again, kind of turn that in support. We're above the 200. The RSI is not overbought. The MACD looks like it somewhat wants to roll over, but we'll see. But you can see it's just butting right up against that trend line right there, wanting to bust through. And the question is, will money continue to rotate out of tech and start heading into these small caps and stuff? And so, again, I told you, with IWM, you'll know when short covering is over where the IWM actually stands, just because economically the environment we're in is terrible for them, okay? Absolutely horrific. And so, but we'll see how it goes. Now, Tesla, a lot of stuff on Tesla here, as you can see, is leaving gap after gap after gap behind because it's just a massive move, man. And you can see there's actually a gap right in that supply zone above its head. Okay, and it was green again today, 2%. So continues to move. I showed you all those calls and the 250 calls are bought up Friday, especially right before close, just hundreds of thousands of dollars, millions really, of them. And again, stays overbought. It's one of those stocks. It can stay overbought for quite a while because it's been overbought the entire time of June on the daily chart. You see those 8 and 21 EMA right there. And usually when you get across on that, especially for Tesla, it is a big move, right? So, and right now they're showing no signs of rolling over because there's been like zero consolidation at all on this move right here. And so keep that in mind. And when we go to the weekly on Tesla, I mean, you can see RSI is looking good. You see that volume gap right there, which is why this can absolutely be filled. If you see call buying start flooding in again, and you get one of these squeezes up, that volume gap, it's going to just flow pretty much right through it, right? It's going to fill that gap right there in that supply zone, pop above it. And so that's why people are, I've seen projections out there for 260, 265. And so just keep that in mind. That's one of the reasons. And I'll draw this trend line. What the heck? I mean, it'll have 3 touch points. We'll see if this will be the 4th touch point, which lines up right around 265-ish. And see if we get a rejection off that, if we can reach it. But one thing, Tesla's been red hot. It's been so hot that it actually reached its longest winning streak ever. And if you look in the little box right there, it may be hard to make out, but you don't see any lines going underneath that box right there. So there's been no down days, right? And so you go across, you can see at least one red day. Nope, Tesla just on fire, right? And I like this right. I sped this up for you. It's like 30 seconds, but this shows you since 2018, the market cap of Tesla versus the other big boys like Ford, Volkswagen, and then of course the grandpa of them all, Toyota, who was dominant for decades, right? You can see at the very end of this, look at that, 774 billion, and the other ones have, what is that, like Ford, Volkswagen, Toyota combined have a little over 300 billion, so it's twice as many. You add Ford in, I think it's still twice as much. And so that's an amazing thing to see right there, but it just, I'm sure it has to frustrate the other companies for sure. But, when we look at Netflix, and this is something I got to start doing. This is a logarithmic chart. It kind of smooths things out for you. But when I started doing this, I'm going to start doing this at least on a monthly basis, see if I can find stuff like this. You can see it only touches every 10 years, guys. 2002, 2012, 2022. So set your calendars for 2032 for a touch of this line. I say that jokingly, of course, but I'm definitely going to, if I would have looked at this, whatever, 6 months ago, you would have seen that touch and said, oh, it always goes up from here. And so sometimes logarithmic charts definitely work, and I'll be using them more for sure. So, and as my wife will tell you, if I set a calendar reminder, it must be something important. So, AMD, you see AMD, I mean, this actually seems like it's outperforming NVIDIA over the last week. I mean, people are still pounding this one. It's still, kind of stuck at that supply zone right there. It was tough to get through. Seems like 130, I think that is. Again, rejected today off of that. It's another one that keeps leaving gap after gap behind as it moves up, because it keeps gapping up in the morning, as you can see. And, but the RSI is approaching overbought. The MACD, looks like it just did a bullish cross, but it looks rough as can be. And you can see those gaps I'm talking about. It keeps leaving every morning. And eventually they'll fill. That's just the way it is, I mean, especially if we get another rejection like 130 right there, which is not bad. I mean, this has been a huge move up for it. But right now it's consolidating between 120-ish to 130-ish right now. As again, you get the AI craze still going on. And maybe people have decided to start rotating some money out of NVIDIA maybe into AMD. Let me know if you're in AMD. But, RSI on the hourly is not overbought. MACD looks just fine. Looks like it may want to roll over for a short-term basis, but we'll see on that. And I actually added the 200 here. And what I thought was funny about the 200 is, remember, it acts as a rubber band, right? You get too far away from it. And right now, I believe we're sitting at 62% above the 200. And as I look back at its other all-time high right here, when it went off, and it was 65%. So it's getting pretty close to getting stretched out, right? It's not, and so we'll see if we can finally get a little pullback on that one. And when I say pullback, I don't mean 30% pullback. I mean literally like a pullback where it consolidates for its next move up, if that's the case, But just keep that in mind. And then shopping, I don't normally talk about, but it had a nice big day today, around 6 or 7%. Talked to the members about this one probably a week or two ago, whatever it was. But it was, busting out this bull flag, came back down, retested, and then moved back up to around 65. Set a new 52-week high. It's another one starting to get away from that 200 moving average right there. But again, on the daily RSI, not overbought. Looks like the MACD is trying to do a bullish cross again. And of course, it's e-commerce, right? So of course, what's Amazon? Amazon goes green today as well. Still playing around with this arc right here. Still respecting it. Still turning that what was supply into demand zone now, into support and stuff, right? Staying above that right there. Up about 2% today. The big thing about this one, and of course, if it moves, I mean, you're talking about filling that 134 to 136 area. is what people are looking for next. But this one right here, man, that 200 of all these stocks, this is the one that 200 still is trying to flatten out. But you can see from March to now, the 200 is still moving down, right? And it's trying to flatten out. Remember, this is the freighter, it's real slow, so it's trying to turn up. But that's what Amazon needs. If it gets that, I think you're going to see a lot more money flow into that one. Now, as far as economic data, obviously you had the business optimism index come out. Who cares? Because it's all about inflation tomorrow, guys. Remember, you have core inflation. This is what the Fed cares about. It's supposed to be dropping 5.5 to 5.3. And then, of course, we'll have regular CPI headline inflation data. It's supposed to be a big drop, right? So you're looking from 4.9 to 4.1. I don't think it matters if it hits it. Doesn't matter. You know, what to see. Again, as long as it's trending down, that seems to be what the market's narrative is. And you can see, I mean, it's funny, right? Headline inflation is there, and then we're still stuck on core. And one reason we're going to be stuck on core for a while, and I'll talk about this in a minute, is one, you got the wage growth, right? Well, now, you know, the lower quartile, the people who actually need the money, theirs is finally starting to cool off. The people that don't need the money, theirs is still on a straight, crazy trajectory up right now. But I also read, and this is what I've been talking about for months, I said we're going to hit a point to where these companies are going to be the ones causing the inflation because they keep raising prices. Even though we showed, all the data shows their inputs are lower, right? But they keep on raising prices anyway. And so, and I read an article today about that with somebody saying the Fed's going to have to cause a recession to get these companies to start lowering prices, right? Because you can't force them to do it. All right, you can't stop them from increasing their prices. They're their own companies. And so, you know, but I see it all the time. I read the comments, and I appreciate all the comments, by the way, because I tell people that's what we need is real-time data. Because a lot of you guys own companies, you know somebody that owns companies. We're all shoppers, right? And so I've seen a lot of you guys saying, hey, yeah, my buddy owns whatever. I think if somebody was selling, they sell jet skis or boats or whatever, and it's dead as a doornail, business is down this. And somebody else will say, hey, up in Canada, my buddy runs this kind of company and it's booming, and he don't know where the people are getting the money from, right? And so it's kind of a mix, right? Depending on where you're at in the country, it seems like, you know. But yeah, I mean, as far as I can see, certain things are coming down, and then certain things are just not, right? And so until they can stop the companies from keep raising those prices, we're just going to be kind of stuck right there. And so we'll have to see how it goes. But anyway, hope you guys got some out of this, guys. Let me know your predictions for CPI tomorrow. Let me know what you think how the market's going to react. Is it going to be a sell the news event, or you think that's going to just keep ramming this thing up? So that's the question I have. So anyway, hit the like, subscribe button if you got anything out of it, and I'll see you tomorrow.